Changing a country isn't easy, but change is inevitable, and the choices we make today will shape our country for generations to come. That's why the Australia Institute is publishing our first book as part of our 30th anniversary celebrations. What's the Big Idea offers 32 ideas for a better Australia from leading thinkers such as Yanis Varoufakis, Auntie Pat Anderson, and Professor Peter Doherty. The essays are a roadmap and a reminder that the solutions exist. Australia just needs the courage to implement them. Visit australiainstitute.org.au or follow the link in the show notes to pre-order your copy of What's the Big Idea today.
As insurance costs go up, for a lot of people, insurance is actually going to be too expensive. More and more households and more properties will become uninsurable. And then, effectively, we have a broken system.
One for Mum, one for Dad, and one for the country.
And there has never been a more exciting time to be an Australian.
Budgets are about choices, Fran, and you show what you value through the choices you make.
This is coal. Don't be afraid. Don't be scared.
The Treasurer knows I want an economy that works for people, not the other way around.
We'll just end up being a third-rate economy, a banana republic.
Just follow the money.
Hello, and welcome to Follow the Money, the Australia Institute's podcast that explains economics, politics, and policy in plain English. I'm Alice Grundy, a research manager at the Australia Institute, and I'm standing in for your regular host, Ebony Bennett. As global leaders dither at COP29 in Azerbaijan, our climate is becoming more dangerous.
And the masterclass in climate destruction. Families running for their lives before the next hurricane strikes. Biodiversity destroyed in sweltering seas.
Our speeches full of good words about fighting climate change nothing. What on earth are we doing in this gathering over and over and over if there is no common political will on the horizon to go beyond words and unite for meaningful action?
Global heating is putting people's lives at risk, and it's threatening their livelihoods too. As climate-induced disasters become more frequent and severe, the global costs of insurance are rising. Australia is no exception. Here, between 2022 and 2023, the average home insurance policy went up by 14%, the biggest rise in a decade. Many are spending months of their annual wage just to insure their homes. More still are being locked out completely, and when disaster hits, they're left with nothing. So what can policymakers do to protect Australians from climate change and the rising costs of insurance? Joining me today to talk about his new research on the subject is Walkley Award-winning journalist and Australia Institute Senior Fellow and contributing editor, Stephen Long. So Stephen, can you take us back? In 2022, Australia's east coast faced some of the worst floods ever recorded. What do we know about the damage from those disasters?
Well, it wasn't just one flood, Alice. It rained for months. It was a deluge. It was Noah's Ark-like, really. It rained, it stormed, rivers flooded from the Wide Bay Burnett region through to Queensland, through to northern New South Wales.
Inland and to the coast, a major flood emergency is unfolding across New South Wales. A restless night is in store for Northern Rivers residents, including the town of Lismore, where heavy falls are forecast tomorrow.
The flood event there is, they're used to floods just like in Queensland, in northern New South Wales, but the floods we're seeing in Lismore, they have not seen. They have not seen them before.
Bill, you're on the water. What are you seeing? As you duck under power lines, that's how high the water is?
Yeah, that's what we're dealing with at the moment, Larry and Kylie, so excuse me if I keep watching my head.
This is devastating. It's completely shocking. The power, the force that was here.
They knew it was going to be a long road back to normal, but 3 weeks on and parts of Lismore still look like a ghost town.
It has now been listed as the fourth worst natural disaster in the world last year. 68% of Australians, so almost 7 in 10 of us, live in an area that was subject to a natural disaster declaration.
Let's start with the human toll. Tragically, at least 24 people died. 1,000 schools had to close down. Livestock died. Crops failed. So Food prices soared, big knock-on effect for cost of living for people nationwide and in the region. But the insurance cost, that was the doozy. Take a guess at how much insurers paid out that year, largely in response to these floods.
Maybe a couple of $100 million?
$7 billion, which was almost twice as much as in any previous year. And keep in mind, Alice, that that's just the losses that were covered by insurance. A lot of properties would have been underinsured. Some stuff wouldn't have been insured at all. So you can probably add on a few billion in terms of the overall cost, that people faced. But $7 billion, it's a huge number. And that's just one event. When we were digging, we sort of started to see a bit of a pattern.
So what kind of pattern were you unearthing?
What we saw was that with climate change, insurance payouts seem to be ratcheting up. So in the 10 years from 2013, the losses that were covered by insurance and the payouts in each year exceeded the combined total of the losses for the first 5 years of this century. Think about that. The first 5 years of this century, and every year of the past 10 or so, the losses have been equivalent to those 5 years. So a massive amount and a ratcheting up over time.
And presumably this has an effect on people's insurance premiums. Is that what you're saying?
Oh, it definitely has an effect on insurance premiums. We came up with a figure last year of a 14% increase in insurance premiums, which was the biggest in a decade, but that's a conservative estimate. We went to data submitted to the regulator and we thought that was probably reliable, but other experts, so actuaries, people who price risk using a different methodology, they came up with a 46% average increase. And the averages hide more than they reveal because it differs widely what insurance costs depending on where you live. One example, insurance costs in northwest WA for home and contents and strata are about 2.5 times the cost in the rest of the country, 2.5 times higher. But one of the other interesting things we did, I teamed up with Dave Richardson, whom you know, who's a brilliant economist, and he busied himself in going through numbers going back over decades, back to 1989, and looked at how insurance costs compared to general prices, the consumer price index. And what we unearthed there, Alice, was an interesting pattern because you could see a difference and a bit of a north-south divide. So in Brisbane, where we know they got hit by the floods and we know they've suffered more damage from climate change, you saw an increase in insurance costs that was more than 5 times the increase in the CPI. Now, Melbourne, which has been far less affected, it was just under 3 times. So you had a big difference. I mean, overall in most cities it seemed to be about quadruple. But you saw two things there. One is that insurance costs were just massively outpacing general prices. And of course that feeds back into the CPI and the cost of living. But just a massive increase compared to prices overall and a divide even in the capital cities. And we know the capital cities haven't been the most affected by climate change. Now, obviously, climate change would only be one contributor to that increase, but it's a sizable contributor.
So you've mentioned Brisbane and Melbourne. What's happening outside of the capital cities, especially in the north of the country?
Well, we really do have a north-south divide, Alice, in terms of insurance costs. So in the top half of the country where cyclones hit, and they're bad enough already, but we're going to see a situation where, according to the climate science, cyclones and tropical storms become more intense. And we've already got a situation where people are paying about twice as much up in those regions. There's some interesting figures from the Actuaries Institute. Now, actuaries are experts in risk and working out risk. They don't usually focus on inequality and equity, but in this report that they did, they had that focus. And the figures were quite staggering. They found that nearly 1 in 8 households, about 1.25 million households in Australia, suffer what they considered home insurance unaffordability, home insurance affordability stress. That means they're paying more than 4 weeks of their income to cover home insurance premiums. That's pretty bad, 1.25 million households. But the doozy was that 1 in 20 households were paying nearly 8 weeks of their income on home insurance. Nearly 8 weeks, nearly 2 months. So, you're spending, say, the first part of your year up to Easter, from when you come back to work and early January, just to cover the cost of insurance. Now, there's a regional concentration in this. A lot of these people are living in regional areas and they tend to be on lower incomes. So you've got that kind of effect. So I found those figures really quite heartbreaking. And I think what that probably means in practice is that a lot of people just aren't going to have insurance. They're not going to be covered by insurance because it costs too much.
We're already in a situation where policy settings like the capital gains tax discount mean that inequality is increasing in Australia. Is it also the case that existing insurance premiums and the changes in climate are going to further entrench inequality? Is it another barrier to a fairer society in Australia?
Alice, it certainly is. We have a situation, a very unfortunate situation, where some of the areas that are going to be hardest hit by climate change are also areas where people on relatively low incomes live and where insurance costs are going to keep going higher and higher. So it's going to cause terrible problems for those people. It will drive inequality, but beyond that, we're actually going to get a patchwork of winners and losers because big data means it's becoming easier and easier for insurance companies to be very prescriptive about how high premiums are, say, in one end of a street compared to another end of a street, a few houses on a block compared to other houses on a block. They can drill down to that level. And so we're going to see a patchwork of impacts that differ from place to place. It used to be in the old days when we weren't quite so good at managing data that some of this risk used to be socialised. And so, people who could afford it more were maybe paying slightly higher premiums in low-risk areas and they were subsidising other people. That increasingly is no longer the case. And that means that a lot of people are going to find that they get bill shocks and life becomes tough. That's one of the downsides of all that information. Upside, of course, is it might help insurers not go broke. But it's going to be tough times for a lot of people, Alice.
And housing prices presumably will be cheaper in areas that are more prone to, say, floods or bushfires. And so it seems as though it's a cycle a really vicious cycle that will only get worse.
Yeah. I mean, they've had to stop people living in parts of Lismore because it's too flood prone. The once in 100-year floods came more than once in 100 years, far more than once in 100 years. Rivers reach levels that no one contemplated. We're going to see more of that, but we're also going to see a situation where poor people need somewhere to live and they go to areas that are riskier and riskier. So, yes, it becomes a vicious circle, a feedback loop where climate change increases costs, has multiple impacts on asset prices, and drives inequality higher and higher. Depressing note.
Oh, that's a pretty grim prospect. So that's on the customer side of things. And on the company side of things, profit margins are decreasing for insurance companies. And you might think, well, boo-hoo, they're getting less in their profits. But what implications does that have for consumers when those profit margins decrease for companies?
Well, let me reassure you to start off with, Alice, that recently insurance companies have been bringing their profits back up. They've been making up what they lost before and restoring their profit margins as we would expect them to under capitalism and as we've seen with so many companies. But what is interesting is that there was a period of consecutive years where insurance companies actually lost money on home insurance, lost money, went backwards. Now, that isn't a good thing in the broad, because the last capitalists you want to be losing money are insurance companies, because the last thing you want to do is see insurance companies fall over. Now, behind the insurance companies, there are reinsurers, and really the last thing we want to see there is that they fall over. But I read some reports saying some of those reinsurers hit by natural disasters around the world were barely covering costs of capital. So the result is they have to actually make money in the marketplace. They put their premiums up, and it's terrible for customers. But it's tricky because we certainly don't want them running close to the wind or losing money, because insurers failing is catastrophic for people who rely on them for their insurance.
While most of the punting action has been focused on Flemington today, economists betting on interest rates remaining unchanged have in fact backed a winner.
So today the board decided to leave the cash rate unchanged. The forecasts published today are very similar to those that we published in August.
So it's been a year now since rates last went up. And that reflects, I think, Mr Speaker, that reflects two things. Firstly, the impact of rate rises already in the system. Australians are already doing it tough enough when it comes to dealing with these higher interest rates.
There are also still heightened costs and things that we can't do much about, like electricity, insurance and supply chain costs. The Governor says as long as they remain as high as they have been, the fight against inflation is not over.
So the Reserve Bank has tried to deal with rising costs across the Australian economy by increasing interest rates. But it seems unlikely to me that higher interest rates are going to have much of an impact on floods or bushfires. Do you think they're paying attention to these disasters and the impact they're having on the economy?
I know they're aware of it, but one of the things I find interesting is that in the current inflation breakout, where the Reserve Bank's put up interest rates 13 times, the Governor's been saying for some time now, we can't cut interest rates because services inflation is too high. And when you look at services inflation, it's things like medical costs, going to the dentist, rents, and insurance. And what the figures show is insurance is really the area where prices have been skyrocketing. And that's largely because of climate change. And interest rates can't do anything about that. So you've got this ironic situation where interest rates can't fix it, but we're putting them up, which is punishing people who have mortgages, pushing down wages, and we can't do anything about it. The Reserve Bank can't do anything about it with that instrument. So it's really a bit bizarre, a bit troubling, a bit puzzling. And what it says, I guess, is we actually need to address climate change. We actually need to stop burning fossil fuels so that we're not causing these natural disasters, or some people call them unnatural disasters, because they're human-induced. It's climate change caused by us that's leading to it. And we probably need to stop having people build on floodplains and put in place mitigation efforts. But, I mean, when you look at the costs, we're actually getting to the point where it's a broken system. And you wonder what the purpose of trying to address this with interest rates through the Reserve Bank is. I mean, do we want people not to insure? Do we want people to underinsure? Clearly not. So why try to address this problem through interest rates? But I think the broader issue there is that as insurance costs go up, for a lot of people, insurance is actually going to be too expensive. households will become more and more households and more properties will become uninsurable. And then effectively we have a broken system.
So thinking about what other kinds of tools there might be, the Morrison government created a $10 billion reinsurance fund, which was supposed to help underwrite the cost of disasters in cyclone-prone areas. Do you think that measure has had much of an impact?
Well, it's early days, but the ACCC has had a look at this in a couple of reports, and so far they have found scant evidence of any benefits for consumers in terms of making insurance cheaper, and it's really expensive in those areas in the northern half of the country. But I guess what it has meant is that insurers are there willing to insure, because without the government stepping in, if they'd had to go to what the government is doing is covering the cost of underwriting their insurance or subsidising that cost. And if the government wasn't there, they just might not be there at all. You might not have insurers in that space because the underwriting costs are so high. But, it hasn't brought down insurance premiums. It hasn't helped consumers. It has subsidised the costs of the insurance companies. So I don't know if that's really a workable solution. And the other thing is, how much do we end up outlaying as climate change travels, as cyclones move further south? So Brisbane and maybe even northern New South Wales become targets. Where do you draw the line in terms of public subsidies for private companies doing this stuff?
And as we're recording, the UN Climate Change Conference is happening in Azerbaijan, and we seem to be sailing past the Paris Agreement target of limiting warming to 1.5 degrees. What is it that governments can do to address this at the root cause rather than at the level of the effect?
Well, we could start with the fossil fuel exporting nations stopping the expansion of fossil fuel projects. Australia could start there rather than approving new gas and coal mines and gas developments. We could start knocking them back, and we could start phasing out fossil fuels, because that's clearly what the climate science says needs to happen. That's what the International Energy Agency says needs to happen. And you might recall that at the last climate summit in Petrostate in the Middle East, they finally mentioned the word fossil fuels, finally said in the communique that the world needed to move towards phasing them out. They actually used the fossil fuel word and the phasing word, but there were no commitments about when that should happen, and it has to happen soon. It has to happen in the here and now, not the distant future. So, yeah, it'd be nice. But I also think what this shows is that in business, amongst capital, you're going to have schisms. So the insurers are right on board with the idea that we need to do something about climate change. They're right on board with the idea that we need to have assistance for countries that are affected by it, low-lying countries, that we need to do something to mitigate the effects. And I don't think that they're happy that the fossil fuel companies are getting the go-ahead. They might not say it publicly, but I don't think we're alone, and I think that there's a significant element of the business class that gets it too, that we need to do something, and sooner rather than later, or else we're going to get to a situation where none of us can afford insurance. We'll have catastrophic disasters that make much of the country and the world unlivable, and the insurance market will become a failed market.
So is this an opportunity for some unlikely allies, perhaps, where some big business groups in the past were maybe a uniform front, and now there's a chance for new alliances?
Yeah, I think so. And those risk guys, I remember someone in my family circle enrolled when we were young men at university, and he went into actuarial studies. And at the time I thought, what a dag. And now I think, hey, he was on it. People who work out risk and the cost of risk, they can be on our side, because they see how this is becoming a terrible, terrible risk and very expensive. So, I'm going to team up as an economics nerd with those actuaries and those insurance guys, and I reckon we should go to the barricades together.
Onwards. Well, Stephen, I think that's all we have time for. Thanks so much for sharing the outcome of your research with us today.
No worries. I'm sorry it was so depressing, but hopefully it's a spur for us to do something about it rather than just wallow in the mire.
Yes, time to take action. If you want to find out more, Stephen's full report, Premium Price, The Impact of Climate Change on Insurance Costs, is available via the link in the show notes. We'd love to hear your thoughts on the show today. You can reach out to us via email at podcast@australiainstitute.org.au, or you can find us on Twitter at the Oz Institute, that's with an AUS. Our theme music is by Jonathan McFeet from Pulse and Thrum, with additional music from Blue Dot Sessions. I'm Alice Grundy. Thanks for listening.